Good afternoon or good morning, depending on where you are. Greetings from Kyiv. Welcome to the UAIB webinar, Collective Investment Institutions as a Financial Mechanism for the Rebuilding of Ukraine. Thank you for joining us today. My name is Anastasia Havreluk, and I will be the moderator of the webinar. First of all, I want to say a big thank you from all of us to all defense forces of Ukraine that make this event possible. Glory and eternal memory to those who sacrificed their lives to defend Ukraine and give us all here the opportunity to be freedom and work. Apologies for the noise, please. Also, a big thank you to all the nations that support us in the struggle for our lives, freedom, independence, and peace in Ukraine and Europe. Just a few housekeeping notes before we begin. Chat is for technical issues only. Please try there if you can see and hear us well, and if you can see presentations when they are going to be demonstrated. Please write your questions to the respective speakers as we go in the Q&A section that you can also find in the bottom of your Zoom window. I will read them out loud to the respective speaker during the Q&A session after their speech. You can also raise your hand. Please find this button below if you wish to ask your question directly. I will see the hand and give you the permission to voice your question directly during the Q&A session. Now back to the webinar subject. According to the calculations of the Ukrainian government, capital investments should amount to $70 to $80 billion annually for at least 5 years after the end of the war. Now, of course, the active phase of the war is still here with us, and we're experiencing some challenges with damaged infrastructure throughout the country, including here in Kyiv. But we're absolutely sure of our future victory, and we are determined to help our country out in its economic recovery. And we are also happy to see some interest from foreign investors in reconstruction and modernization of Ukraine in the aftermath of the war already now. As you may know, world leaders have recently met to discuss Marshall Plan for Ukraine. Prime Minister Mikhailenko announced the losses suffered by Ukraine as a result of Russia's full-scale invasion that already reached more than $750 billion. The World Bank has pledged to assist Ukraine in the post-war recovery process. The Multilateral Investment Guarantee Agency allocated $30 million to Ukraine for implementation of a pilot project on investment insurance. Prime Minister announced this just a week ago in Berlin, where he also said that the government is determined to maximize facilitation of investment attraction and reduce state interference in the economy. We at UAIB believe this is all good news, and the respective developments will help improve investment climate in the context of the war and beyond it. Meanwhile, we on our part will also keep playing an important role in Ukraine's recovery process. So during this event today, we explain how we're going to do that and how you can be part of this grand story. So a few words about UAIB and myself. The Ukrainian Association of Investment Business is one of the oldest trade bodies of the Ukrainian financial market, being established 27 years ago, just 4 years after Ukraine has regained its independence. Today, the association has more than 300 member asset management companies and about 24 non-state pension funds administrators. We are a self-regulatory organization and provide comprehensive support to our member companies throughout their life cycle and that of their funds under management and administration. I have been working with UAIB since 2007 in various roles, and since a few years ago, I'm Director of International Relations and Senior Analyst. I was happy to help establish cooperation between UAIB and the Pharma about 10 years ago, and with many members of the Pharma National Associations, in particular in the CE region, some of whom are joining us today, and it's great to see you here, along with all the other attendees. Now I'm happy to present our distinguished speakers. Yaroslav Zhelezniak. Yaroslav was elected MP in 2019, and he is first deputy head of the Committee on Finance, Tax Customs Policy of the Verkhovna Rada. Yaroslav has specialized in government's relations, advocacy and communications since 2010. He worked with local and international companies, as well as with the Ministry of Economic Development and Trade of Ukraine, Prime Minister of Ukraine. And before that, he was member of the Strategic Consultancy Group for the support of reforms in Ukraine. Yaroslav is head of the NGO Agency of Innovative Democracy, an expert in the American Chamber of Commerce, and is lecturing at the Kyiv School of Economics. Last Friday, Yaroslav returned with the Ukrainian parliamentary delegation from Japan. Welcome back, Yaroslav, and thank you for joining us today. We also have Vitalii Vavryshchuk, head of Macroeconomic Research Department of the ICU Group. In his role, Vitalii is responsible for macroeconomic support of the group's transactions in emerging and global capital markets, as well as developing investment advice for clients. Before joining ICU a year ago, Vitalii had been part of the reformist team of the National Bank of Ukraine for over 6 years, since March 2015, holding the position of Director of Financial Stability Department of the NBU, where he was responsible for analyzing and minimizing systemic risks in the banking sector. Vitalii also was a member of the NB Monetary Policy Committee. Prior to that, he worked for 8 years in various investment companies, and now Vitalii also teaches at the National University of Kyiv Mohila Academy. Thank you, Vitalii. Grygorii Ovcharenko is also with us today. Grygorii is director of Upinvest Asset Management Company, which is part of the ICU Group. He joined the company and group in 2018, and also is head of local asset management of the group. Grygorii is responsible for all local business, including pension funds and institutional clients. He has more than 20 years of experience in executive investment and marketing fields. In particular, before ICU, Grygorii had worked for over 6 years as CEO of the OTP Capital Asset Management Company and as board member of the OTP Pension Fund. Also, since 2011, Grygorii is a UAIB Board Member. Thank you, Grygorii. We're also joined by Borys Bidiy, senior lawyer and advisor in investment projects implementation at B-L-R Asset Management Company. His main areas of expertise are investment projects, project-tied lending, venture investment, construction, securities, land law, and tax law. Borys took part in more than 20 investment projects. He also has published extensively, in particular on financing the construction of real estate. Thank you, Borys. Dmitriy Mikhailenko, managing partner at Crowe, Mikhailenko, has past experience in tax structuring, including for major Ukrainian financial and industrial groups, Ukrainian and foreign investment companies. He is actively involved in the work of the public councils at the Finance Ministry of Ukraine and the Parliamentary Tax and Customs Committee. Dmitry is ranked among top 100 best tax lawyers, and his team is ranked in the Legal 500. And in his team, he has Vitalii Smerdov, partner and head of tax department. Vitalii's fields of expertise are tax law, international business structuring, investments in Ukraine and abroad, tax disputes. Vitalii is a member of the Public Council at the State Fiscal Service and head of the Chamber of Tax Advisors. Thank you, Dmitry and Vitalii. And last but not least, we have with us today Olha Horitska, who will be presenting on behalf of Ready Invest Asset Management Company. Ready Invest entered the market in early 2011 and has 8 funds under management. Half of them are unit venture CIIs, and other half are corporate funds of the same type. The director and owner of the company, Taras Nakonechny, PhD, has 28 years of combined experience in banking and asset management. Key investment sectors of the company are construction, agriculture, financials, and energy sector. Thank you, Olha. And now I would like to give the floor to our first speaker, Yaroslav Zhelezniak, who will give us the overview of the legislation on investment activity in Ukraine. Yaroslav, please, the floor is yours.
Thank you for inviting. Thank you for the meeting. And I hope that in 10 minutes I will give you the general understanding what we have already done on legislative level for attraction of investment and what we are planning. Once again, let me introduce myself. I'm the first deputy of one of the biggest committee in our parliament. This committee combined 2 very important issues. First of all is taxation, and at the same time the financial sector, banking and non-banking sector. So at least 2 topics I could cover from my point of view. I'm responsible in our committee as the first deputy head for financial and capital market regulation, as well. I'm head of the working group for on legislation which somehow connected with this sector, so I could describe what we really want to implement in this year and next year, and of course during the so-called Marshall Plan for recovery of Ukraine. So first of all, one of the key promises which we try to keep, sometimes it's very hard, is for stability of Ukrainian legislation. I know that is a huge problem for all investments, no matter how they was engaged, but what we try to fix, and somehow it's happening, is not to change rules during the play and during the 1 year or some longer time. So now we have a lot of legislation initiative from the government when they want to change some taxation, to implement some additional regulations, and to make some rules more strictly. And we are trying to keep them out from the business and not to adopt such draft laws. So the next point is regarding the protection of investment rights. It's very important. One of part of that is connected with our justice system and justice reform, which has to be somehow implemented. And the second part is special legislation. As you know, our committee in the beginning of our convocation of the Verkhovna Rada have already adopted draft law which connect with legislation, with protection of rights of investment and investors. But we are planning to work further in this sphere and protect your rights if you will decide to continue to invest in our country. As I said before, we really have the position in the committee that our laws has to be sustainable, and we haven't changed them every month. But one of the key draft laws which I am doing personally, and I hope that we will vote that in second reading till the end of the year, is a big draft law regarding the regulation of capital market. This draft law connects several topics. One of them is the rights and obligation of the Special Committee on Security Exchange. Some of the changes for draft legislation of derivatives and stock markets, and some other laws which connect with the issues of investment. We really tried to do two things during the preparation of this draft law simultaneously. One of them is implement some European Union Euro integration obligations, but at the same time, as we are not the member of the European Union, and we hope that it will be soon, but currently we are not the member, not to implement or postpone some obligations due to we become the member of the European Union. And it is very important, and this is the next issue what I want to raise, that of course we will, during our Euro integration, we will implement all our international obligation, and especially international obligation in investment and financial sphere. But at the same time, we understand that currently we have the time for experimenting to make our legislation more liberal. And I think it will help to engage more investment if our legislation in financial sphere and will be more pro-business, but not pro-government. And now a lot of our participants and members of our working group, and I hope that we somehow manage to fix and balance these two things. The next is taxation. As I said before, during the war, there is a logical step of the government to increase taxation. What we, as the members of the parliament and core committee for these issues, ask them not to do that and to save all rates as they are now. So it's like some deal with the business when we are not raising the taxes and the business is not giving up to invest and to work in Ukraine. At the same time, I'm also of the, and as well as the head of the committee and a lot of members of the committee, we are already submitted to the Verkhovna Rada draft law regarding long money or in a special investment accounts. So we are planning to create some accounts on investment firms or in the bank where you could invest your money for 3 or more years, And if you will not withdraw this money till this period, so it is like will become long money, you are not paying the additional taxation for that as it's currently now. Also, we're working on other mechanisms how to invest in Ukraine. Frankly speaking, it's very hard because unfortunately we are not have a very good intentions from some of our state bodies, but I hope that in the next half of the years, we will adopt from the parliament as well from other regulatory body a lot of additional mechanisms how to attract investment in Ukraine. Last but not the least, as you know, we are waiting for big package of preparation and Marshall Plan and the plan for rebuilding of Ukraine. There is different vision how it should be and what amount of money it will be. According to the World Bank, we need $350 billion. We have more expectation for the government, but nevertheless, it will be a huge amount of money. And I think that it will be it's now very clear that we could not count on rebuilding of Ukraine without investment. Moreover, unfortunately, due to negative balance of citizens who are living have already left our country and not planning to come back, we could not now count only for our internal market. And of course, the investment is the first priority for the government, for the parliament, and I'm sure for all Ukrainians. So I hope that this is not only my understanding of the things, but it is joint understanding of all political leaders that without investment we could not implement a plan of rebuilding, reconstruction, repairing of Ukraine. And of course, that in protection of the rights of investment, proposition of some more attractive rules, even which have some European members countries. Some experimenting, like I don't know, like cryptocurrency legalizing, or some additional instruments on stock market and trading, tech, fintech, and all initiatives which connected with fintech. I hope that it all will be and at the agenda in the nearest future. And even before our victory, we will prepare all needed legislations and implementations rules to attract as much investment as we can during the phase of rebuilding of Ukraine after, of course, our victory. Thank you.
Thank you so much, Yaroslav. And if the audience has any questions, please, you can raise your hand. Okay, I can see any. So thank you once again, Yaroslav, and we'll let you go.
Anastasia, there is one question in chat. I see there is one question in chat.
Yes.
Have you made specific changes to bank law in the EU or EUA? Sorry, I am not understanding this question. These questions. Specific changes for what?
Can you please specify your question?
Martial law. Of course, we have some changes for law, banking law during the martial law. We give them some additional and the obligations and the rights for national bank and one of them is the special rules if a bank was owned by Russian beneficiaries, and there is the sanctions for such bank, what will happen with such bank, and how the procedure of nationalization should be. But thanks for our predecessor. Are you compliant to rules and adjustment clause? Yeah, we are working on that, and I'm not sure that I'm 100% right, but in banking sphere we have one of the biggest or fastest success in whole our European integration process. So for your understanding, I'm really proud by our national bank. I know that there is some question for them, but they are really heroes during the beginning of the war. And of course, that in the future, the team from the National Bank will make lectures in Harvard, Stanford, and others respectable institutions how to manage banking and financial system during the war, because they only they have in the world such experience, unfortunately, but still. And for your understanding, everything what National Bank asks us, we as the Parliament implementing in as we call it, turbo regime. A lot of Ukrainians know what it means. Very fast. And I personally work with national banks on my issues. And there is a lot, once again, as I said, a lot of people who are also engaged in our different working group on the different draft laws. And the position of the national bank is very strong, and almost what they ask us, we're implementing. And once again, in banking sphere, we have one of the best situation. Of course, there is some space for improvement, but I think that we are more than complain, and we have one of the greatest status in the banking sphere regarding all our European integration of Ukraine.
Thank you so much, Yaroslav. And now we'll let you go as agreed, or if you have time, please stay with us. Okay, once again, for the audience, please do write your questions to the speakers while they speak in the Q&A section and not in the chat. It will be easier for us to manage the questions. Thank you. And now I'm giving the floor to Vitalii Vavryshchuk, who will tell us how Ukrainian economy operates during the wartime and what are the prospects for different economic sectors. Vitalii, please.
Hello, everyone. I'm very pleased to be talking to you today. So I will be giving you a brief overview of what is happening in Ukraine, how the Ukrainian economy is doing during the wartime. You know quite well that economic analysis and forecasting are very tricky during the wartime, but still we have to do that to have an understanding whether the worst is already behind us and what the challenges that lie ahead are. So I would like to start my presentation by saying that Ukrainian economy is doing much better than we could imagine when the full-fledged war started back in February 2022. So there were many very negative projections, I would say apocalyptic projections, that economy would collapse. But today we understand that even though the damage to economy has been huge, economy still continues to operate, and Ukraine's GDP had been recovering recently. So back in February and March, many forecasters predicted that GDP could probably contract by 50%. We now have GDP data for the second quarter of 2022, and the second quarter was probably the most difficult quarter for Ukrainian economy. And Ukrainian Statistical Agency said that GDP contracted by 37%. So 1/3 of economy is lost, but as the safety situation started to improve since April, economy started to recover. So we estimate that Ukraine's GDP in the third quarter was probably 30 to 35% below last year's GDP. Of course, we have a new problem these days. So Russia started to attack Ukraine's energy infrastructure, and we have many long blackouts across Ukraine. Many industrial enterprises, many businesses don't have uninterrupted supply of electricity, so they have to suspend their operations for a while, practically every single day. So this new problem will definitely undermine Ukraine's GDP. And for the whole year, we expect that economy will contract by about 32-33%. Are there any catalysts that could change the outlook for Ukrainian economy in a material way? I think there is only one possible theoretical catalyst. Ukrainian economy could get a boost if Black Sea ports were unblocked. You may know that Ukraine restarted exports of grain and oil seeds through Black Sea ports, and that helped a lot Ukrainian agriculture and Ukrainian FX market, because Ukraine started to receive FX revenues. And ideally, Ukraine would like to have an opportunity to export not only grains and oil seeds, but all types of goods, all types of commodities, including metals, iron ore. But we understand that this is very unlikely to happen because Russia will simply not let us do that. So Ukrainian economy will contract by roughly 1/3 this year, but we have an expectation that it will somewhat recover in 2023. The recovery is not going to be fast. Ukraine is still facing many challenges that will impede economic recovery. So our projection is that GDP will be up by about 3 to 5% in 2023. So we hope that we don't see any other so-called black swans that would change this outlook for the Ukrainian economy. Inflation in Ukraine accelerated considerably, and for very obvious reasons. Many supply chains have been destroyed. So supply of goods and services in Ukraine became much more expensive. Also, local currency hryvnia depreciated, which added to inflationary pressures. And also Ukraine saw a very significant increase price hike for gasoline. So all these factors combined added to inflationary pressures. And we expect that inflation will reach roughly 30% by the end of 2022, which is very high number. Obviously, this is very high number, and this is significantly above the inflation target of the National Bank. But of course, we remember that inflation is not only a problem of Ukraine these days. It is also a problem of many other, including neighbor countries. if we look at some of the neighbor countries, like Hungary, Romania, Baltic states, inflation is also close or above 20%. So Ukraine is not an outlier. So despite war happening here in our country, our inflation is not significantly above inflation in the neighbor countries. But what is most important, we expect that inflation will start to decelerate since March 2023. So, and by the end of 2023, it may decelerate to about 22%. Of course, to reach single digits, we'll need at least 2 years, This is not going to happen quickly. So inflation remains high, so NBU naturally had to respond, and NBU hiked its key policy rate from 10 to 25% in June. And NBU made it clear that it's going to keep this rate at 25%, at least until second quarter of 2024. So Ukraine will be facing environment of high interest rates, at least for the next 18 months. So high key policy rate is supposed to ease inflationary pressures. It is supposed to make returns on hryvnia-denominated assets much more attractive. So indirectly, it will also help to reduce pressures on the FX market. So once again, Ukraine will be facing high interest rate environment, at least for the next 18 months. Then we move to the external sector, which changed considerably, and it changed very quickly, almost immediately after the war started in February. On this chart, you see the key components of the balance of payments. So I give numbers for 3 months of 3 summer months of 2022 versus 3 summer months of 2021, and you see a significant deterioration of across key components of the balance of payments. So trade in goods balance. Ukraine is facing huge deficit of external trade in goods. Why so? Because Ukraine has difficulties exporting its commodities. Logistics is impaired. Also, many large exporting companies have been simply destroyed during the war. So those businesses which were located in the war zone or close to the war zone, they were simply destroyed. They lost their physical assets. They can no longer produce metals or iron ore, which Ukraine used to export before the war. So trading goods balance is significantly negative, and it's unlikely to improve in the coming years. Trading service balance, it's also significantly down. We are facing trade in service deficit for the first time in Ukraine's history. Ukraine has been enjoying trade in service surplus for many, many years. What changed? Many Ukrainians left the country after the war started. So they have to spend money on their current needs abroad, and those expenses are treated as import of services. So that's why we are facing a deficit of trade in service since the start of the war. Also, there are significant capital outflows, even though NBU imposed very strict capital controls since the beginning of the war. immediately on the same day the war started, but there are still several channels for capital outflows. Trade credits is one of the key channels for capital outflows, and another channel is cash outflows from banks. What stands behind these outflows? Ukrainians withdraw hard currency from ATMs, from their hryvnia accounts, so meaning they convert their hryvnia into hard currency, and this adds pressure on the NBU reserves and on the FX market. The only stable source of capital inflows to Ukraine remains migrant remittances. So Ukraine has traditionally enjoyed very robust and significant inflows of migrant remittances, and they remain robust and they remain significant. So the war did not change anything here. Ukraine is still enjoying significant inflows of migrant remittances. So if we take all these components together, we see that Ukraine faced outflows of roughly $10 billion over 3 months, June, July, August, 3 months of summer. And of course, this is a significant problem for balance of payments. But fortunately, this is not the end of the story. Fortunately, Ukraine is receiving significant amount of international financial assistance, loans and grants, and this international financial assistance was just enough to offset capital outflows that Ukraine faced during the summer. So we are lucky that our international partners are committed to supporting Ukraine, and thanks to their commitment, thanks to their generous support, we are not facing a catastrophic balance of payment crisis in Ukraine. Of course, NBU, there is significant shortage of hard currency in the interbank market. But NBU receives international financial assistance and it sells hard currency. So it intervenes in the market by selling dollars and euros and provides and makes the FX market balanced. Ukraine had to devalue, the National Bank of Ukraine had to devalue the local currency, hryvnia, by roughly 25% versus US dollar in late July. But since late July, local currency exchange rate has been roughly unchanged versus US dollar. So NBU now has sufficient reserves to keep local currency exchange rate at a fixed level. And NBU made it clear that it will keep exchange rate at a fixed level in the coming months, because the NBU believes that fixed exchange rate provides a very important anchor for economy. So, and also fixed exchange rate helps Ukraine contain inflationary pressures. So it looks like NBU indeed has sufficient reserves to keep hryvnia exchange rate unchanged, but of course the prospects for fixed exchange rate, they depend on how much of international financial assistance Ukraine will receive in 2023. So international financial assistance, it's not only helps support NBU international reserves, it also helps cover state budget deficit. revenues of state budget collapsed since the war started, and but Ukraine could not cut expenditures. On the contrary, Ukrainian government had to increase expenditures to buy military equipment, ammunition, to continue making regular social payments, to continue making payments to the army, and which implies that the state budget deficit just ballooned immediately after the war started. So you can see the left-hand chart, which shows the ratio of revenues to budget expenditures. So Ukraine had a totally comfortable level of 87% in 2021, but you can see how this ratio collapsed since the beginning of 2022. So currently, Ukraine government collects via tax and non-tax revenues only half of what is needed to finance budget expenditures. And this situation is not expected to change in 2023. So Ukraine is expected to spend twice as much as it collects in tax and non-tax revenues. And this difference, this another 50%, is going to be covered with international financial assistance. So Ukraine will continue to rely on the United States, on the European Union, on the IMF, all IFIs, many Western governments, to keep its budget balanced, to maintain a regular financing of the critical needs. So, as I said, international financial assistance is the key source to cover budget deficit, and Ukraine expects that international financial assistance may reach $38 billion in 2023. Of course, heavy borrowings will increase debt to GDP ratio for Ukraine. So Ukraine had a very comfortable debt to GDP ratio of just 50% before the war started, and of course this ratio will go significantly up in 2022 and 23. So there is a risk it may exceed 100% in the next 2 or 3 years, and of course that's an issue that will need to be addressed after the war is over. And to conclude my presentation, I would like to give a couple of thoughts about how the war impacted individual sectors of economy and what are the prospects for the recovery of those sectors. Of course, it's almost obvious that after the war is over, the investor interest to Ukraine will be significant. Once there is a peace treaty, once there is a full confidence that the worst is behind, I guess Ukraine will be able to attract significant investor interest. But my expectation is that investors will be much less interested in investments into capital-intensive sectors, which are vulnerable to physical destruction. So probably service sectors will be the key winners, the key beneficiaries of the post-war recovery. Of course, investors may demand insurance of war risks. Of course, war risks are not covered with normal insurance contracts. War risks are treated as force majeure, but Ukrainian government is working to make war risk insurance a viable and easily available product for international investors. Of course, we understand that risk premiums demanded by international investors will be significantly higher after the war. When investors will be making return analysis, they will demand much higher premiums. And also, an important factor to keep in mind is that Ukraine received the EU membership prospect in June 2022, and we know from the history of the Eastern Europe that EU membership prospect is a powerful catalyst for reforms. So we are sure that it's also going to be a powerful catalyst for reforms in Ukraine. The Ukrainian government made it clear it will do their best to make Ukrainian legislation compliant with the EU regulations as soon as possible within the next couple of years. So this will probably be another factor that will make investments into Ukraine more attractive. So just to conclude, I'm confident that when Ukraine's GDP is back to the pre-war level, the composition of Ukraine's GDP will be completely different. When the war started, Ukrainian economy relied heavily on industrial production, and the share of industrial production will become smaller. On the other hand, services will be booming, and probably this segment will become the key driver for the Ukrainian economy during the post-war recovery. So this slide concludes my presentation. Thank you for your attention, and I would be happy to take your questions.
Thank you very much, Vitalii. I can see no questions in the Q&A section. If anyone wants to ask your question directly, please raise your hand, push the button in the bottom of your window, and I will give you the floor. So let's see. Okay, if
I see a question in
yes,
chat.
a question in the chat. So if you can read it.
Yeah, it's about heavy industry infrastructure, which is destroyed beyond repair. So yeah, the answer is yes. Many large industrial companies are destroyed beyond repair. Just keep in mind Mariupol, a large industrial city on Azov sea coast. So Ukraine's two largest metallurgical plants, two significant large metallurgical plants were located in that city, and they are totally destroyed. And basically they will need to be restored from scratch. It will demand huge investments, and definitely these investments will not come very soon after the war is over. So the answer is yes, many businesses will have to be restored from scratch, unfortunately.
Thank you, Vitalii. Thank you very much. And our next speaker is Grygorii Ovcharenko, who will explain what a CII is and how it can be a financial mechanism for the rebuilding of Ukraine. Grygorii, please, the floor is yours.
Okay, can you see the presentation?
We can see you right now. Can you please share your screen?
Yeah, just a second.
Yes, great, thank you.
Thank you once again. Grygorii Ovcharenko, I'm a head of asset management business at ICU. It's the largest asset manager in Ukraine. My objective today is to deliver you some insights into collective investments industry, or investment funds industry, as we call it. And I would like to start from the general overview. Collective investments industries has 2 decades, I would say a few decades, mostly 3, but it's not so old compared to other countries. It's appeared after the USSR collapsed, and the first investment funds appeared in 1994, and they're primarily used for privatization process. At the moment, there are about 300 licensed asset managers. The number is declining due to tightening regulatory requirements, which managing about 2,000 investment funds with different investment strategy, with assets under the management slightly above $14 billion. They are also managing, by the way, the pension funds. The asset under the management is insignificant compared to overall business. It's like 100 million euro or US dollars in equivalent due to the absence of the second pillar. We expect next year the government will vote for the next the new law which introduced second pillar reform, and it might be an additional driver for the market's capital development. As for the legal landscape, it's more or less the same as elsewhere outside Ukraine. We have variety of types of the investment funds. We have two main corporate structure: unit investment funds, which issues investment certificates, and the corporate investment fund, which is a separate legal entity. In terms of placement, there are two types: public and private placement. It might be referred with the certain, I would say, elements to the usage and the alternative investments regulation. But in terms of placements, we also have the open-ended, interval, and closed-end, and there are variety of asset classes similar to the European classification: equity, bonds, multi-assets, including the real estate and others. And in terms of diversification, we have diversified, non-diversified, qualified, specified, which varies depending on the entry level and the qualification of the investor. So using these types, actually, it's any investor can construct any vehicle for the investments into Ukraine. If we look at the broad picture, we will see that more than 90% in terms of the volume, assets under the management, and in terms of the numbers of the funds are represented by the venture funds, so-called in legal meaning in Ukraine, what refers to alternative investments funds. The question why they became so popular for the financing of the private equity and real estate project? Well, to my mind, because of the, I would say, several benefits. First of all, it's operational efficiency. No requirements to staff, no premises, simple accounting. Secondly, it's tax benefits, no corporate profit tax, deferred taxes for the investors. And more also important is the transparency of this instrument. As a financial institution, it has, I would say, many requirements to the disclose of the information, and that provides some kind of confidence to the investors. They always know what is going on. If we look at the legal basis or service providers, we will see that on the example of the corporate structure, we will see that fund, which is a pool of assets, is represented by the board, which should be not less than 3 persons, and they are acting on behalf of the fund. From the service provider side, the key role plays asset management company, and which carries on the asset allocation, risk management, net asset value calculation, placement, redemption, and many other functions, very important for the operational of the fund. No, as well as custodian. Custodian is in charge of the keeping and service of the assets. In some cases, oversight of the activity, verification of not in custody assets, and others indicated in the contract with custodian. Depository role is to maintain the securities at its account and provide with information on the owners. An auditor, as well as elsewhere, the objective of the auditor is to provide a fair statement, information on the audit and calculation of the taxes and other financial statements. From the authorities oversight, there are two main bodies. That's a regulator, it's National Stock Market Commission, which in charge of the registration of the documents, compliance and financial monitoring oversight, and reporting and prudential indicators analysis, and tax inspection. I would say many local players, I cannot say afraid of collaboration with the tax inspections, but actually very afraid of, I would say, of this tough view and role of tax inspections. But it plays quite a good role for the investors, because it's provide the independent, I would say, view on the correctness of the calculation on the taxes. So investors is to be sure that everything is okay if tax inspections provided its audit. And the final, I would say, point is how to get into Ukraine. No, first of all, if not selected, the objective of the investor is to select asset management company and local custody and the bank. At the moment, the key, I would say, routes into Ukraine is to select the local custody, which will maintain the securities of the investors. Then visit Ukraine, which can be a tricky thing and quite thrilling. At the moment, regulator and National Bank of Ukraine has already developed, I would say, changes to regulation in order to simplify procedures, I would say QIC procedures, which doesn't require obligatory visit of the investor of Ukraine. But if you didn't have a chance to come to Kyiv or any other city before, so now you have it. And the final point, just to make a deal, on the basis of the size of the investment, the objective is to calculate the number of the certificates to transfer fund, which can be transferred from the local accounts opened in the local bank, or in some cases in the foreign account opened abroad, and to make a deal. So this is, I would say, some steps which are legally not complicated, but takes time in order to start, I would say, collaboration with the local counterparts. If you have more questions how to, I would say, construct the appropriate mechanism of collaboration with Ukrainian partners, you might address your questions to the email mentioned in the presentation. I suppose our moderator will submit the presentation to you later on. If you have any questions now, I'll be happy to answer them.
Thank you, Grygorii. Let me check if there are any questions. There are no none in the Q&A section, and maybe anyone wants to voice their question directly. No. Oh, all right. Yes, thank you. Great material, Anders says to you, Grygorii. Thank you very much. And now I'm inviting Borys Bidiy, who will focus on the mechanisms for investor control over the fund's activities. Borys, please. Floor is yours. Grygorii, please stop sharing your presentation so that Borys can do that.
Can you see my presentation?
No, not yet. Grygorii, can you please stop sharing your presentation? Thank you. Borys?
Good afternoon, everyone. Can you see?
No, we can see you, your face.
Can you see my presentation yet? You can't see?
No, not yet. Let's try that again.
Not yet. But okay. I'm sorry. Oh.
Yes, thank you.
Oh. Here it is.
Perfect, thank you.
Oh, thank you. Thank you very much. Good afternoon, everyone. It's good to see that so many of you were able to attend this event. My name's Borys. I'm with the legal department of B-L-R Asset Management Company. So mechanism for investor controls are the fund's activities. The Ukrainian war is definitely a disaster. However, it's on other hand, it will open a window of opportunity in modernization and renewal of economy, Ukrainian economy. Vladimir Zelensky, the president of Ukraine, signed the order on the formation of National Council for the Restoration of Ukraine. At the international conference in Lugano, Switzerland, large-scale plan of recovery of Ukraine was presented to the EU. We will take as a basis the document, the outline of the reconstruction of Ukraine published by the Center of Economic Policy Studies. It can be found on the website. According to the plan, the special agency issues funds through defined Ukrainian financial intermediaries to ensure compliance and accountability. But who are these financial intermediaries? We are persuaded of the answer of this question as follows. These financial intermediaries could be and should be collective investment institutions, here and after funds, which are perfectly suited to this role. About the legislation, a few words about the legislation. Ukrainian has a fully developed and elaborate legislation in this field. Part of it you can see in the slide. Choose funds type for investment in projects. There are many different types of funds in Ukraine provided by law. About it have told previous speaker. Type of collective investment institution which should be chosen: venture fund. The institution, they do private security placement and with minimal asset requirements. Stated differently, it's an institution that invests in certain projects. Legal form of institution in Ukraine divided into corporate investment fund, KIF, that is legal entity, and unit investment fund, that is not a legal entity. So it's venture fund that is chosen for investment. We also choose corporate investment fund for the following reason. It's a corporation that issues shares for investment. For its regulation, applied corporate governance rules. The properties are registered in the name of the fund. The asset management company can be substituted because legal relationship between fund and AMC based on agreement. It fully complies with rules of international taxation that provided by double duty treaties with other countries. Does the KIF manage its assets itself? Answer is no. It does asset management company that obtain proper valid license from National Security and Stock Market Commission. The licensee has the right to carry out the relevant activity after the issue of the corresponding license by the Commission and after the record was entered to the register of financial institutions. On the slide, you can see legally provided restrictions for asset management company. I am to say only some of them. Asset management company during the course of the activity has no right to acquire property and security of types not provided by the investment declaration of the fund. Conclude sale and purchase agreements with connected persons of asset management company. Transfer ownership of property, which is the asset of the fund, to the asset of AMC itself and vice versa. Licensing requirement. The ownership structure of the licensee should be transparent and shall disclose information concerning the ultimate beneficiary owner, UBO. A natural or legal person who owns a significant stake or who exercises the authority of single executive body or exercises the authority of the head or member of the supervisory board must have a confirmed business standing reputation. Asset management company should have certified employees. The director, chief accountant of asset management company shall meet certain requirements. Particularly, they must have appropriate work experience. The licensee must comply with the regulatory values of the prudential norms. The licensee holder is obliged to create a comprehensive, effective system of internal control, which includes the subsystem of compliance, risk management, and internal audit in accordance with standard. Create a comprehensive, effective system of internal control means implementation that meets the law requirement of corporate governance in asset management company. For example, you can see extract from Capital Market and Organized Commodity Market Act 2006, Article 76 on the slide. System of control asset management company. It has many control subsystems. Disclose the financial statement that submits on basis of taxonomy and submit it to the authority, commission, tax department, statistics. Annual financial system must be published on the website of AMC with conforming its audit report. provide anti-money laundering measures, corporate governance. So corporate governance, and the next point of view, it's corporate governance. Principles of corporate governance, the bodies, you can see the bodies of AMC, general meeting, supervisory authority, structural subdivisions that are part of internal control system, and principles. 4 principles for corporate governance: the effective management and professional participants, particularly effective management of professional participants, particularly a proper division of tasks. Supervisory action is in relation to the operational activities, prevention and settlement of conflict of interest, responsibility for improper organization of corporate governance. The highest body in supervisory authority. In all professional participants, regardless of organizational and legal form, the highest body of the professional participant creates a collegial body responsible for supervision, supervisory board. The member of the supervisory authority, supervisory board, shall meet the qualification requirements for business reputation and professional suitability. The decision of the highest body and body responsible for supervision are made within their competence and are binding on the executive body and other persons executing executive function in the professional participant employees of the internal control system. Corporate governance in asset management company. The provisions of the internal policy of the professional participant of capital market should provide some special powers to the body responsible for the supervision. You can see it in the slide. Only one of them that I should mention in this connection: approval and control of the organization of the compliance, risk management, and internal audit. The quantitative composition of the supervisory board is not less than 5%, of whom at least 1/3 are independent. The body responsible for the supervision set up standing committee from amount of its member, audit committee, committee of remuneration determination, appointment committee, risk management committee, others. Model of 3 lines. The professional participant organizes interaction of the internal control system and functional subdivisions that are subordinated to the executive body with the application of the model of 3 lines of protection, models of 3 lines. You can see it in the slides. The first line is at the functional level. The second line is at the level of the risk management and the compliance department. The third line is at the level of the internal audit department to check and assess the effectiveness of the risk and compliance management subsystems. Here it is. So we need to say that implementation of above-mentioned principle of corporate governance and 3 lines of protection are the safety measures of asset management company, reliably protect investors' assets and interests. In conclusion, we would like to point out that the asset management company is in reality, not only does the classical management of assets, but also render surfaces of project management. You can see on a few last slides following. The main task of asset management company is to control the funds that the fund receives from investors to implement the investment project. For control of the investor funds, AMC develops a mathematical model of project and periodically revises it, develops a project implementation, performs required resources, intermediaries, and final results of each project stage, and present it using a professional software. After the approval of the project implementation plan by the relevant key management bodies, the AMC implements these plans, maintains management record of the project results, controls the prices of the project, and as a result, cost of the project. Various legal techniques such as collateral, mortgage, debenture issues, to name a few, are used to secure the return of funds that are invested. Auction and tender mechanisms are used to control the level of prices. The project results are provided to the key supervisory board every month for adjustment. If necessary, provides accounting and its result in financial index online to the project manager every year. And if it's necessary more frequently, AMC reports to the key shareholders at the general meeting every year. An audit of KIF is conducted and submitted to shareholders. According to the law, KIF reports to the Commission and other supervisory bodies, providing daily, monthly, quarterly, annual reports. Thank you for listening. And if you have any questions, please don't hesitate to contact us. That is, thank you for listening once more.
Thank you, Borys. Let me check if we have questions. There are none in the Q&A. Maybe someone wants to raise their hand and ask their question. Seems not. Okay, thank you very much once again, Borys. And please stop sharing your screen.
Thank you.
Yes, next I'm inviting to the floor Dmitry Mikhailenko, who will cover issues of taxation of foreign investments in Ukraine. Dmitry, the floor is yours. Borys, please stop sharing your screen so that Dmitry can do that.
Can I share your screen, or it's on you, Anastasia?
Wait a second, Borys, you need to stop sharing your screen.
Mm-hmm. Borys, could you stop sharing your screen?
Okay.
Thanks so much. Can I try to share my screen? Dear colleagues, do you see my screen? Taxation of foreign investments in Ukraine. I believe yes.
Yes, we can see a presentation. Thank you.
Yes, so thanks so much for opportunity to deliver this report. We were very big fans of Ukrainian Association of Investment Business and support your activities for maybe a dozen of years.
Thank you so much. Just excuse me, can you please open your presentation full screen?
Open presentation.
Full screen mode, please.
Full screen.
Yes.
I will try to do it. Unfortunately, I don't know exactly how to do it.
It's in the bottom of your window, closer to the right corner. Show of slides. It's like a glass.
Excuse me.
That's okay.
Excuse me. The right down window.
It's in the bottom of the window, closer to the right corner. And
Right
the button is like a glass.
Like a glass. No, it's nothing. Moment.
Okay, maybe let's just move to the next slide and we'll see them in this mode.
Is it okay?
Yes, but the first slide is cut in half. Let's move on. Yes.
So, thank you once again, and we will try to provide a short overview of taxation of investment activities in Ukraine, and inter alia the opportunities for tax planning using such vehicle as corporate investment funds. Now you see at the screen the most popular structure of popular structuring of business which is using the collective investment fund in Ukraine. It means that this structure, collective investment fund revenue, derives revenues in form of interest, royalty, or capital gains, and then distributes dividends to its shareholders. It is shown as letter N at the top of this graphical structure. And the overall model is supported by quite liberal mode of taxation. It means that the collective investment fund itself enjoys zero taxation from the profits deriving from its activities, and the shareholder, if it is say the individual, should pay 10.5% of its personal taxes, namely military tax and individual revenues tax, upon the distribution of dividends from collective investment fund. So the overall taxation may come up to mere 10.5% upon the distribution of dividends by the individuals, and no corporate taxation as such. As to VAT, many transactions of collective investment funds, namely mentioned interest, royalty, and transaction with shares, are VAT exempt due to Ukrainian legislation, and therefore no VAT impact for this transaction by this structure in overall. Only personal taxation, which in our opinion is quite moderate and fiscally interesting for the investors both in Ukraine and from abroad. Of course, we should mention that if we have the investor, the shareholder, who is foreign investment of shareholders, these investors can or should pay the respective taxes at the country of its residence. And the overall volume of taxation in his or their country will depend on the regime of taxation in this country. But the taxes in Ukraine, 10.5%, can be deducted against the taxes which should be payable at the country of such investors. The next slide outlines the most popular model of the cooperation between corporate investment fund and operational business. The vehicle is loans. Corporate investment fund can grant loans, interest loans, to the companies in which this corporate investment fund owns at least 10% of the shares of the shareholder capital. So in such case, it can be a lender and provide the respective loan facilities. Ukrainian legislation do not establish the interest rate which can be can support this loan facility, and as a matter of practice, corporate investment fund and their borrowers can look at the bank loans, but if the loan from corporate investment fund is not guaranteed or securitized by hard pledge or mortgage, in this case, the interest rate can be higher than the respective rates which are established by bank institutions, because the loan is more risky and less securitized. In overall, this model allows for borrower to deduct all the interest which are arising at this loan facility, while the corporate investment fund shouldn't pay the respective corporate profit taxes upon the collection of the respective interest from the borrower. Therefore, it is quite an effective model which not also provides for the respective funds for the operational business, but also create opportunities for a certain tax planning, because borrower can deduct expenses while investment fund shouldn't pay corporate tax on the amounts of interest. Here you see the most popular structure, as I have mentioned, where the shareholder or the ultimate beneficial owner is the individual or physical person, owns corporate investment fund, and in its turn provide loan facilities to borrower and can be the shareholder with the shareholding capital of this borrower at least 10%. The more complicated model is where the legal entity is over the corporate investment fund. It creates risks because there is a position of our tax service and Ministry of Finance that dividends which are distributed by corporate investment fund in favor of legal entity should be taxed by legal entity at the 18% rate of corporate profit tax, which is not very interesting comparing with the situation where the shareholder of corporate investment fund is the individual. We constantly are opposing this position of tax authorities, and we believe that it is inaccurate or wrong, and it's not grounded on the wording of the tax code of Ukraine. And we draw your attention that this position that no taxes for the legal entity who obtain revenue supported by the Parliament Committee of the Verkhovna Rada of Ukraine. But the clarification of Ministry of Finance and State Tax Service are still pending, and therefore we still believe that certain risks are arising around this model of arranging business. So you should know all these risks and then decide which model it is better to choose. So let us follow. In previous years, there were attempts of the state tax service to reclassify loans into authorized capitals, but they were opposed by the taxpayers, and the taxpayers were supported by the respective courts in Ukraine. So we believe that this risk no longer exists. What else? The latest attempt of our tax authorities to somehow harm to the investment business was the letter of National Security and Stock Market Commission, which tried to reclassify forwards which are used for the investments in construction as the assets which do not belong to the respective corporate investment funds. But as well, this position was trespassed by the taxpayers, and the position of taxpayers that these forward instruments are the assets of corporate investment funds and can be be exempt from corporate profit taxation. It was also supported by the Supreme Court of Ukraine in 2020. So as well, we believe that this risk is no longer exist. We should pay your attention at the amendments of tax code of Ukraine related to the latest reform in area of investment to construction. Namely, we have got recently such new type of assets of phenomena, legal phenomena, so the proprietary rights in the future constructed residential business. And alongside with these legal amendments or regulatory amendments, our parliament issued the amendments to tax code of Ukraine, which are aimed to support correct taxation of the transaction with these new assets. Namely, the transactions with these assets are VAT exempt, and the transaction with these assets, proprietary rights, as well, is exempt from corporate profit. So we see that our corporate investment funds still enjoy the respective tax allowances, even if new types of assets like rights for future constructed residential buildings exist in our legislation. So these are good news. As well, we should provide you with a certain background of investment activities, not also related to investment funds, but which is connected with the activities of investment funds in Ukraine. Namely, you should know that Ukrainian legislation contains such a regime as taxation of non-residents who sell shares of Ukrainian business originated from real property, even if both seller and a buyer are non-residents of Ukraine. In such case, not residents who is the purchaser should register with Ukrainian tax authorities in order to withhold respective Ukrainian taxes arising against the sale of shares, which are so-called real property rich shares that are originated from real property located in Ukraine. Next issue is the rules which provide so-called, which are reclassifying to dividends certain payments, including the sale of or repurchase of shares by collective investment fund. It can be reclassified to dividends with the respective taxation due to Ukrainian legislation, 50% withholding tax, or by the respective double tax treaty, which can reduce the respective taxation to certain level like 5 or 10%. But such rule exists, and corporate investment funds should pay attention to the transaction of repurchase of their shares from the shareholders, non-residents. Well, we have beneficiary own rules, that is, non-resident who obtain dividends from Ukrainian taxpayer, like corporate investment fund, should have certain level of substance in order to enjoy the provisions of double tax treaty, and can reduce the Ukrainian withholding tax downwards to 5 or 10%. Our Ministry of Finance succeeded in amending of a number of double tax treaties with other countries who contain the low tax rates of withholding tax addressing to dividends payments. You see at this table that the respective amendments came into force with Cyprus, Great Britain, Switzerland, and the Netherlands. And in every tax treaty, we see certain amendments, like in Cyprus. They were 5% tax rates and 15%. But 5% will be supported by only one conditions, either the investment at the amount of 100,000 euro or ownership of 20% of corporate shareholding capital. But after the amendments to these double tax treaties, the general rate was decreased to 10%. It is good news, but the 5% rates was supported by two conditions. That is, both investment of 100,000 euros and the ownership of 20% in the shareholding capitals. Therefore, to obtain and to enjoy a reduced rate at 5%, it is more difficult than it could before. And so on. So Ukrainian Ministry of Finance is working in order to increase to a certain amount the withholding tax rates, both for dividends, royalty, and interest. And for corporate investment funds, the amendments of VHT rate related to dividends is quite significant, quite a material amendments. Now we come to some other issues around Ukrainian taxation, which can be used by the foreign business investment in Ukraine. It is general overview, but I believe it would be interesting for our audience. First of all, we have the tax benefits for small business. The overall burden of taxation for the individual which engaged in small business, individual entrepreneurship, is reduced to 2% at the wartime, Marshall period. So instead of corporate profit tax and VAT, such individual can pay, or a legal entity even can pay only 2% of single tax and no more. It is a very good rate. No other state, at least in Europe, can provide with such low regime of taxation. As well, we have the special tax regime for agriculture. Instead of corporate profit tax and number of other taxes, including land tax, the agricultural company can pay the single tax, and it results in vast economy of the effective tax rate of agricultural company. So they can gain profits and pay dividends to their shareholders. And it would be quite a significant tax reduction for this model of business. And many collective investment funds in Ukraine are associated and accompany such operational agricultural business in Ukraine, as a matter of fact. Last year, we have implemented the special regime of taxation for IT business. As well, very good taxation, so-called exit tax at the rate of 10%, instead of corporate profit tax at the rate of 18%, and special model of taxation of IT engineers, which are working with the IT company, only 6.5% of their individual taxation, plus minimal social remittances. So as well, for investments in Ukraine, it's very good regime of taxation, and you know that IT industry is significantly growing in Ukraine. It becomes the most rapidly growing industry, and it provides us with the most of profits. Well, we have two more tax regimes which are very interesting for foreign investments. This are so-called industrial parks, and the regime of significant investments, which is called investment nannies in Ukraine. What are the industrial parks? So this is the land plots where the respective activities, including construction activities and industrial activities, are developing. And the residents of this industrial park can enjoy the exemptions for corporate profit tax for 10 consecutive years. It is a very good tax benefit. I believe it would be very popular among Ukrainian businessmen and their foreign investments as well. Also, industrial park residents can enjoy certain benefits for VAT and customs duties for the equipment which are imported at the territory of Ukraine from abroad, and it is used at the location of this industrial park. And we have the VAT exemption for such import transaction. Not more than for 3 years. And this equipment cannot be sold within 5 years. So it's very good, very good. And as well, there are possible of the additional tax allowances, namely real estate tax and land tax for these industrial parks in Ukraine. And we have similar tax benefits for so-called, excuse me, we have some more tax benefits, such as compensation of social security contribution for the working place created within the industrial park, and in certain cases even 100% of social security contributions. And finally, we should pay attention to investment nannies regime. It is the regime of taxation which provides with similar benefits as industrial parks. That is the exemption for 5 years from corporate profit tax, exemption from VAT and customs duties for the equipment which is imported to the territory of Ukraine, and exemption for the land in certain cases. But unlike the industrial park, this is a regime for big investments, where the overall amount of investment should come up to, if I'm not mistaken, 20 million euros. And where there is obligation to create working places, if I'm not mistaken, at least 80% should work at this company. And if these conditions are met, the governmental agency can provide the respective investment and its or his investment project with such allowances in area of corporate profit tax, VAT, customs duties, and land tax. Maybe it is all which I should outline in this part of report. I believe that Ukraine can provide very favorable tax regime for the foreign investments coming to Ukraine, and we hope that upon the end of the war, or even despite it's going, foreign investments can take into account these allowances in order to develop their business and to buy the respective, or to invest to respective Ukrainian industries with the help of investment funds. Thank you for attention.
Thank you, Dmitry. There's a question from the audience. Which EU countries does Ukraine have tax agreement with to avoid double taxation being implemented?
You repeat once again.
What EU countries does Ukraine have tax agreement with? It's about double taxation treaties, I suppose.
Ukraine, if I'm not mistaken, to my best knowledge, have double tax treaties with 73 countries. In general, it is quite widespread network of double tax treaties. Maybe we are not the Netherlands, but 73 countries, it is half of the all countries which exist at the map. And this work is going on. I believe that Ministry of Finance will enter into new double tax treaties with some other countries. I believe I shouldn't just mention all the countries from these 73, but generally we do not have any problems with placement of investments to Ukraine using the respective double tax treaties.
Thank you, Dmitry. Let me see if we have someone raising their hand to ask a question directly. No, I can see that. Well, thank you once again very much, Dmitry. And please stop sharing your screen.
Okay. Yeah. Thank you.
So now we move on to the last part of our webinar, where Borys Bidiy from B-L-R and Olha Horitska from Ready Invest will present some of their investment projects that aim at helping rebuild Ukrainian infrastructure and economy from the Russian war and improving the lives of Ukrainians. Borys, let's start with you, please. Can you please share your screen?
There is examples of real investment projects that have started in Ukraine or is going to start. The first one is a new paper mill in Kyiv region. You can see a description of the project. Establishment of the paper mill with 2 paper machines. Location Kyiv region, festive, as a greenfield project. It will be based on 5 hectares of land plot. Project budget 10 million US dollar. You can see on the slide short market analysis that says wrapping paper is for those used the machinery to be produced on machine number one. On paper machine number one, it is planned to produce paper with low grammage from paper from European and other suppliers are of super high quality and have higher prices. In Ukraine, there are only 2 paper mills that which can produce paper of such grammage. These paper mills have obsolete equipment, and their production capacity is not significant to saturate Ukrainian consumers in this paper brands. So at the moment, there is a shortage in Ukraine for the paper brands of the grammage and quality the new paper mill is going to produce. A lot of paper is imported. Other machine is paper for sanitary items to be produced on the machine number 2. Ukrainian market for sanitary items is growing by 17% per annum and considered to be 4th largest market in Central Europe, Eastern Europe. Main producer of first quality production are 2 plants. It occupies 74% of total market, and 26 belongs to the small producer. Detailed description of the project. It's planned to establish full-fledged production company, which will be equipped with all necessary equipment aimed at the production of the packaging paper and paper for sanitary items, paper towels, napkins, etc. Paper with the installation of 2 paper machine and auxiliary machine. The land plot will be provided by the festive municipal council. All preliminary consultations as to land allocation are positive and finished. The new company will be the right to place the production premises on the territory of industrial park situated with the limits of festive municipal council. According to the Ukrainian legislation, the company's residents of industrial parks has certain incentives with paper mill with enjoy accordingly. Investment request. The investment budget for the whole project is estimated at the level of 10 million USA dollars, including construction costs, 2 million, and equipment, $7 million. Working capital, $1 million. That was the first project. Another one is I'm sorry. It's a business center, which developed a concept group. Conception of this business center. The business center is a reflection of the leading global trend in the creation of office buildings. Unique architecture, convenient location near the underground, modern technological solution, a large terrace of the roof favorably distinguish the building from its competitors. The concept of the business center also provides for the creation of the covered atrium with tropical greenery and comfortable temperature for the all year round. Business center is located at the intersection of the main business highways of Kyiv, Boulevard Druzhby Narodov and Vasilkivska, and near Valery Lobanovsky Prospect. The location is really good, as it allows you to avoid most of traffic jams while allowing you to enjoy all benefits of the central business district. Here you can see it's on the map. The general information about Technique Index you can see on the slides. Planned allocation of premises. Fast food restaurant, high-level restaurant, bank branch, massage room, notary, delivery department, mobile conference hall, car wash, covering parking for cars and alternative transport, charges for electric cars and alternative transport, guest parking, terrace, dry cleaner, event hall for events, and service operation 24 for 7 days. You can see the specification of special equipment on the next slide. And we remove to the economical part. The implementation period is 23 months. The total amount of investment $25.4 million. The amount needed for implementation is $5.6 million. The amount to be sold directly depends on the sales of square meters, and total pre-tax income will be approximately 33 million. That is with that project. And the next project that I would like to present, it's Novodolazhsky abrasive plant. It's expansion project. Novodolazhsky abrasive plant founded in 2013. I'm sorry, That's here. Founded in 2013. Located in the Kharkiv region, in the settlement Nova Vodolaga. The main activity is the production of abrasive cutting wheels and grinding discs on a bakelite bound with reinforcing elements. The leading specialists of Ukraine and Italy participated in the design of the construction of the no abrasive plant under the control of David Maternity, Italy. The plant was certified under ISO 9001-2008 quality management system for organization and enterprises in 2015. All products of the plant are certified in the European Union and have all necessary certificates of compliance with quality and safety requirements. The plant manufactured products under its own trademarks, no abrasive, Hetman, well cut, as well as under the order for customers from all over the world under their trademarks. The plant employs about 300 people. The plant produces more than 30 million pieces of abrasive wheels per year. The turnover of the plant is 10 million euros. The plant is leader in Ukraine market. The plant has a wide network of distribution through Ukraine. Here it is. More than 40% of the plant's products are exported. Products are delivered to more than 40 countries of the world. In slide, you can see fixed asset of the plant. There is need to build a new production facility and purchase a new production line. The task is to double the production capacity and reach an annual turnover of 20 million euros or more. To the growing cost of logistics from China to the European Union and the opening of borders between Ukraine and European Union, the abolition of duties on production manufactured in Ukraine, our products are in demand and competitive in the European market, European Union market. So the requirements investment can roughly be construction of a production site with an area 5,000 million meters square meters, 3 million euros, purchase of the necessary equipment, 6 million euros, working capital, 1 million euros. The total investment budget could reach 10 million euros. Implementation period, 2 years. Thank you for listening.
Thank you very much, Borys. Let me check if there are any questions. Not yet, at least. Okay, so thanks once again. And Olha, the floor is yours now. Borys, please stop sharing your screen so that Olha can present.
Okay.
Thank you. Olha.
So good afternoon. Thank you once again for this opportunity to present our projects. So let's begin. The whole world knows that Ukraine is currently at war. Russia destroys not only destinies of people, but also destroys their houses, the infrastructure of cities and villages. People are suffering. They have nowhere to live and nowhere to live. So now it is an acute problem for Ukraine. The scale of destruction is enormous. Most of the houses cannot be restored. They are beyond repair. This means that there is a lot of construction work ahead. The war has a negative impact on the country's economy and business conditions, as you heard from presentations earlier. And our company is experiencing certain financial difficulties in the implementation of construction projects. However, our potential and experience allow us to participate in implementation of our affordable housing project. Despite the fact that the war is still going on, there are regions where construction can already begin now in the nearest future. Hundreds of thousands of families need affordable and quality housing that can be built quickly. So time and quality are the most important factors, and our project is able to solve this problem. So affordable housing is a project whose task is to solve the problem of providing the country's population with inexpensive and at the same time quite comfortable housing using the latest technologies for the production of building structures. This project provides for the construction of a modern plant, for the production of reinforced concrete products, for the construction of residential and public buildings with a production capacity of 100,000 square meters per year in a full cycle while working in one shift. The main objectives of our project are creation of a new high-tech production of residential and public buildings from precast contract. That could be residential buildings, schools, sport facilities, covered parking, and so on. And the second one is increasing competitiveness and profit from the sale of residential and public buildings from precast concrete and meeting the needs and requirements of the Ukrainian market. So now about main factors of the success for our project. Firstly, our company, Redinvest, have already signed a memorandum with the local government in Bucha, its northern Kyiv region, on providing us with a plot of land for the construction of this plant. And also this memorandum provides state guarantees to attract investment funds. Secondly, bringing together all construction participants under one management, design bureau, building materials manufacturer, general contractor, financial model, so on. Also, advanced technologies in the production of reinforced concrete products is also the factor of success of our project, and the use of new solutions in the design and as a result in the construction of residential real estate. So equipping the plant with equipment of the plant itself will be carried out in accordance with new plant construction technologies with the participation of Lucha Betoni, it's a company from Finland, and PKBX, also another one plant from Poland. Their proposed technologies are based on new technical solutions and meet the modern requirements of affordable housing and energy saving. So our project involves attracting investments in the amount approximately $32 million. But due to the warfare obstacles, we cannot provide accurate financial and economic indicators of the project. But based on pre-war calculations, the profit from the square meter of real estate will be at least $100. And the return of investment is 6 years. So to finalize, we have no time to waste. Every minute is important. So if you believe in our project, the Ukrainian people will believe in us. I believe that together we will be able to return homes and hope for a normal life to people, life at home in Ukraine. More than ever, we are united and strive for victory. Glory to Ukraine, Slava Ukraini.
Thank you, Olha. Let me see if we have questions from the audience.
If you have any additional questions, we, of course, we will send all the needed information necessary in our presentation in PDF file.
Of course, thank you,
all the
Olha.
calculations, yes.
Thank you so much. And now we're about to finish our webinar, and I'd like to note that well, if you have any questions later on, just email me and the speakers, and we'll be happy to give you our feedback. All the presentations, the slides, and the video recording will be sent out to all the attendees. And to sum up, as you can see, there's great potential in the Ukrainian economy despite the war, and the CIIs are indeed already playing and will continue to play a very important role in its recovery and modernization during and after the war. World Bank, as well as other international financial organizations, the EU, and many democratic nations have pledged to support Ukraine in its recovery and reforms. And we here, as local investment professionals, are happy to make our input and make an impact. Thank you to all the attendees. Thank you to all the speakers. Thanks for your time, attention, and interest in helping Ukraine rebuild and prosper, fulfilling its dream of becoming the modern European nation. Ukraine will prevail. Slava Ukraini!